Right now, your brain is actively working to prevent you from ruining your life over a typo. Think about the last time you sent a text message. Maybe you accidentally sent your boss a completely mangled autocorrect, or you typed your phone passcode wrong 3 times in a row because your thumb hit 2 numbers at once. It's annoying, it's mildly embarrassing, but the universe keeps spinning. The digital world is built with safety rails specifically because engineers know that human fingers are clumsy, flesh-covered meat sticks trying to navigate tiny, rigid plastic keys. But every once in a while, a human error slips entirely past the safety rails. In 1962, NASA launched the Mariner 1 spacecraft toward Venus. Just a few minutes into flight, the rocket began veering wildly off course. The culprit? A programmer had missed a single, tiny mathematical hyphen in the guidance code. The mission ended with a self-destruct command over the Atlantic Ocean, burning an $80 million hole in NASA's pocket because of a single key that wasn't pressed. To understand how a single human being could accidentally vaporize $250 million in a few keystrokes, we have to look at the exact environment he was sitting in. The date is December 8, 2005. The place is Tokyo, Japan. Inside the offices of Mizuho Securities, one of the country's massive institutional investment firms, the atmosphere wasn't just busy, it was a digital gladiator arena. Traders were fueled by cheap coffee, blinking neon terminal screens, and the pure adrenaline of an IPO morning. An IPO, or initial public offering, is the exact day a private company decides to list its shares on the open market for the very first time. It is the ultimate corporate beauty pageant. And on this specific morning, the star of the pageant was a brand new, hotshot tech recruitment company called JCOM. The financial media had spent weeks hyping JCOM up as the next big thing. Investors across Asia were desperate to get a piece of it. The moment the clock struck 9 a.m. and the market opened, the stock was expected to skyrocket. On a trading floor, speed is everything. If you hesitate for 3 seconds to double-check your screen, a rival firm will steal your trade, your client will get angry, and your bonus will evaporate. Sitting in the middle of this chaos was our main character. History has kept his name anonymous to protect him from a lifetime of corporate side-eye, but we know he was a relatively junior trader at Mizuho. His boss hands him a seemingly simple order from a wealthy client. Go out there and sell one single share of JCOM stock for 610,000 yen. At the time, that was worth about 5,000 US dollars. Our rookie sits down at his terminal, opens up the trading interface, and places his hands on the keyboard. He has done this thousands of times. But on this morning, the room is loud, the market tickers are flashing red, and his brain makes a tiny, catastrophic calculation error. He doesn't look down at his hands. Here is the exact mechanical breakdown of how a $250 million hole gets punched into reality. The trading software had 2 main data entry columns right next to each other, one for the number of shares you wanted to trade, and one for the price you wanted to sell them at. In his rush to beat the market clock, our rookie accidentally inverted the figures. Instead of typing 1 in the quantity column and 610,000 in the price column, his fingers flew backwards. He entered a quantity of 610,000 shares and set the selling price to 1 yen per share. To put that in perspective, 1 yen is less than a single US penny. He didn't just offer a massive corporate asset for the price of a piece of chewing gum. He accidentally offered to sell 41 times more shares than JCOM actually possessed in the entire world. He literally manifested millions of dollars of fake equity out of thin air, put it on a 99% off clearance rack, and hit the submit key. Now, standard financial software is supposed to have built-in sanity checks. If you try to sell a skyscraper for $1, a pop-up should usually appear asking, "Hey, are you experiencing a medical emergency?" But the Tokyo Stock Exchange system didn't blink. It saw the order, assumed Mizuho Securities knew exactly what they were doing, and broadcasted the offer globally to every financial terminal on Earth. Within milliseconds, institutional algorithms and thousands of retail day traders sitting in their underwear at home stared at their monitors in absolute disbelief. JCOM stock wasn't climbing, it was cratering to zero because someone was aggressively dumping an infinite supply of it for a penny. The internet didn't pause to ask questions. Nobody called Mizuho to see if they were okay. Instead, the global trading community went into an absolute feeding frenzy, hitting the buy button as fast as humanly possible. Among those staring at the screen was a legendary Japanese retail day trader who went by the internet handle BNF. Operating out of his bedroom, BNF saw the glitch, instantly recognized that a massive institution had completely screwed up, and deployed his entire net worth to scoop up millions of these mispriced shares in a matter of seconds. It was the ultimate digital gold rush, and while the rest of the world was getting rich, our rookie trader was about to look down at his screen and realize his career was completely over. Back at Mizuho headquarters, the rookie trader finally looks down at his terminal, takes a look at the trade confirmations flooding his screen, and feels his soul instantly leave his body. He realizes what he's done. Panic rips through the trading floor. He moves his mouse, hovers over the order, and slams the cancel button. Error, request denied. He tries again. He hits cancel a third time, a fourth time, nothing. As it turns out, the Tokyo Stock Exchange's automated trading software had a bizarre, hidden programming quirk. If a stock was moving too fast, or experiencing an extreme surge in volume, the system would automatically reject any manual cancellation requests. The software basically decided, things are way too chaotic right now, so I'm going to ignore everyone until things calm down. With their computer terminals completely locked out, Mizuho executives frantically grab their desk phones. They bypass the standard channels and call the upper management of the Tokyo Stock Exchange directly, screaming over the static, "Pull the plug! Abort the JCOM trades! We made a catastrophic typo!" But the operators on the other end of the line freeze. The exchange's strict protocol dictates that they cannot manually interfere with active market trades unless there is a literal hardware failure or a natural disaster. An administrative screw-up, no matter how massive, doesn't qualify. The exchange tells Mizuho, "Sorry, rules are rules. If we turn off the computers for you, it ruins market integrity." It was the ultimate corporate nightmare. Mizuho Securities was completely paralyzed, pinned to the floor by their own industry rules, forced to sit back and watch their capital bleed out into the digital ether in real time. For 13 agonizing minutes, the feeding frenzy continues unabated. Every single millisecond, computer algorithms across the globe are vacuuming up thousands of shares of JCOM for a single yen, forcing Mizuho to buy them back at full market value to settle the trades. By the time the exchange executives finally realize the sheer scale of the systemic collapse and step in to manually freeze the stock. The damage isn't just bad, it is historically catastrophic. In less than a quarter of an hour, a single human being typing in the wrong columns had vaporized over 40 billion yen, roughly 225 million US dollars. Mizuho hadn't just lost their daily profit, they had wiped out an entire fiscal quarter of capital because a software loop refused to let them hit undo. So where exactly does $225 million go when it vanishes in 13 minutes? It doesn't disappear into thin air. It lands directly into the pockets of the people who were fast enough to exploit the glitch. Remember BNF, the day trader operating out of his bedroom? By the time the dust settled and the stock was frozen, he had personally walked away with a staggering 2 billion yen, roughly $16 million in pure profit. In less than a quarter of an hour, a guy in his 20s made more money than most people see in 10 lifetimes, entirely off the back of a corporate keyboard error. He used the cash to buy an entire multi-million-dollar office building in Tokyo, cementing himself as an absolute legend in the internet trading community. But while day traders were celebrating, the financial world went to war. Mizuho Securities looked at their massive loss and said, "Yeah, we made a typo, but your broken software wouldn't let us cancel it. This is your fault." The Tokyo Stock Exchange fired back, saying, "Your trader entered a mathematically impossible order. Learn how to type." The resulting legal battle dragged on for a staggering 10 years. It wasn't until a decade later that the Japanese courts finally handed down a definitive ruling, forcing the Tokyo Stock Exchange to pay Mizuho roughly $130 million in damages. Executive-level heads rolled immediately. The president and CEO of the stock exchange resigned in disgrace, and the entire infrastructure of global trading had to be torn down and rewritten. Today, every major financial market in the world has what are called kill switches and dynamic price bands. Hard-coded safety rails specifically designed to detect when a human has lost their mind or their typing accuracy, freezing the order before it ever hits the public. The anonymous rookie trader at Mizuho learned the single most expensive data entry lesson in human history. So, the next time you accidentally reply, all to a company-wide email or text your boss something completely unhinged by accident, just take a deep breath, look at your keyboard, and remind yourself, at least it didn't cost you $250 million. This is the Crude Canvas. If you want to see how a modern squad of infantry soldiers would handle an accidental trip through a time portal to face off against an ancient Roman legion, hit that subscribe button, and we'll see you in the next sketch.